With 2020 fast approaching, I want to look at one investment that I believe looks good for the new year, and that is gold. Supporting my opinion is the central bank gold buying spree, which is expected to continue as countries try to create a hedge against geopolitical risks and diversify away from the US dollar. As of October, central bank gold purchases have totaled about 562 tons, and that's based on the data from the International Monetary Fund and reported by the World Gold Council. That amount is generally similar to 2018, which marked the highest level of annual net central bank gold purchases since 1971. And that's what we know of. We may not know what China and Russia have been buying. Now, let me read this quote to you from Howard Marks, the founder of Oakmark. My view is simple and starts with the observation that gold is a lot like religion. No one can prove that God exists or that God doesn't exist. Well, that's exactly the way I think it is with gold. Either you're a believer or you're not. So, do you want to know more? Well, let's take a look. Philip Newman of London-based consultancy Metals Focus called this year's central bank gold buying exceptionally strong and said he thinks that net buying will continue at a high level next year, even if it's not as high as 2019. Apparently, central banks are looking toward gold to help balance some of their global risks. Also significant is that global negative yielding debt is now about $15 trillion and expected to grow. Another driving force behind gold purchases is the desire for some central banks to detach from the US dollar, and this is mostly evident for Russia and China. As shown in one of this channel's recent videos, the dollar has lost more than 80% of its value since 1971, while gold has appreciated from $35 an ounce to nearly $1,500 an ounce during the same period. The days where the dollar was a reserve currency are certainly now numbered, and central banks are increasing their gold reserves now. But Russia and China aren't the only countries buying gold. Other countries buying gold include Poland and Serbia. Speculation is that the Dutch central bank is another potential buyer. So let's now go take a look at our charts. For me, the best way to track gold is the Spiders Gold Trust. And so we're looking here at the 20-year monthly chart of the Spiders Gold Trust, and the symbol is GLD. For disclosure purposes, I do not hold any shares of the Gold Trust at this time. Now, this is an interesting chart. So do you see what I see? And let me just simply point it out. Looking from here, look at this base. This is a multi-year base. This is an excellent basing pattern that you want to see. And then we have that. So, in my humble opinion, what this is forming is a wonderfully long, very powerful cup and handle. So watch this handle as it forms here. I think it's not quite finished forming. But since the bottom here in 2015, we've come up a little bit, not a lot. But I think once this handle, if it is a handle, forms, I think that the move off of that and then the move beyond this point here is going to make for a very powerful run in gold. Now, that's the cup and handle, but it also shows up for us in our chart here in the MAC. Again, here's the cup, and then the handle is actually going to be here. So watch this fast line here. It's heading on up. It looks though, if you come down here to the histogram, it looks like it's starting to kind of turn over a little bit. And that's fine. That's exactly what you want. I hope it is turning over, which means that the fast line could come crest here, come down a little bit, but stay above that zero line heading out here, continue to crest down, and then pop back on up. So moving down here in the price rate of change, it's not quite cresting here, Hopefully it does that relatively soon here, but it is above that zero line, so it does have some power. Now into the RSI, it's at a 68.26. Now the RSI does indicate with that top here that maybe we'll have a continuation of a sell-off. But that sell-off you want to be on low volume and very steady, moving on down just slightly. Nothing panicked about a decline in the price. No huge correction or pullback, just a slight decline in the price with the volume tapering off. Looking here at the stochastics, again, this is looking like it's trying to crest here, not quite yet. But we would like to see that fast line come through that slow line and maybe start to move down here toward the 50 or midline as the price sells off with low volume in a very controlled manner. So watch this. Then we have volume. Just as I said, volume looks like it is declining very steadily, and we want to see that decline. It might not decline at the same pace, but we'd like to see a decline continue here in the next few months to a quarter or two. Looking at the Williams, pretty much the same thing. We do have that top here and then the slight decline. We want that decline to continue. Back up here to the price chart. We want that decline to continue. I'm not sure how far down it will go. I'd say maybe somewhere above that 125 level, between there and where it is on the close on Friday of 142.33, someplace in there. And I think we have so much advanced notice based on those oscillators that we can just simply watch this month after month after month. I don't know how long it's going to continue, but I think we've got another month or two, maybe a little bit more, a quarter, 2 quarters, I think at the most, or 6 months. But watch that tail off in the price. Then what's going to happen is it's going to turn back on up. And once it hits this point here, the 142 or thereabouts, once it gets past that, that's going to make it pop because that's when other investors are going to jump in because they're watching this like you and I are. But I think we have a lot further advanced notice than they do. So it's possible that you can get in through this level here, or you can wait for that to crest above that top of the cup there on the right side. Either way, it doesn't matter to me. I think that gold is going to be very interesting in 2020. But as usual, conduct your full fundamental analysis. And for today, that's Dog Charts. Thank you.